I want to talk markets now. Earnings season so far and expectations for big tech earnings next week. For that, we've got Greg Branch, managing partner at Veritas Financial Group, as well as a CNBC contributor. Julie Biel, portfolio manager and senior research analyst at Kayne Rudnick. She's also a CNBC contributor. Folks, I think we're all trying to make sense of what's been a hot streak and whether the streak continues, whether you take your profits now, whether this is just the beginning of a run. Where are we, Greg?
So it depends on what you're talking about in terms of hot streak, Andrew, because the actual results have come in pretty much in line with consensus at around negative 7.1%. Now, the equities have traded much differently than that, particularly since we've gotten the normal, beat on the lowered expectations. But what I expect is that we'll probably see the highs for the year this July. Remember, I've always said that the second quarter is going to come in better than expected, and I expect it to come in the negative 5 to 6% range. And I think that that'll be a source of optimism for this month until we hear from the Fed later this month and until they reset the narrative that they want the market to digest.
Julie, you in the same place?
Yeah, I think second quarter looks like it's going to be a continuation of first quarter where lowered expectations are easier to meet. But you're starting to see already that indications from guidance continues to be pretty soft. And it really depends what sector you're talking about. So certain sectors are already clearly in their own earnings recession. What I think is worth noting is we all know that people have been overpaying a lot for tech, but you're seeing it in the industrials too, where there's been lots of multiple expansion. And if we get major deflation in that sector, you could see margins really contract a lot.
So, Greg, for the last week or two, there's been a whole group of people who've come on our air and said, very likely chance of a soft landing, no recession in the offing. These numbers are great. The Magnificent Seven won't just be the seven. It's going to be everything. The Russell 2000. But go rotate out and buy the Russell 2000 because this is just an expanding bull market. It sounds like you have some anxiety about that view.
I have a differing opinion to that view. I don't know if I'd call it anxiety, but the Magnificent Seven was just a catchy phrase for companies that are going to give us continued earnings growth, even through a contraction, that are going to give us margin expansion, that have secular tailwinds behind them. And so there are lots of companies outside, well, I shouldn't say lots. There are other companies outside of those Magnificent Seven that probably share those characteristics. And I think that we'll see breadth re-narrow around those types of companies as we get into a macro environment that becomes more challenging and that is more evident that it's going to become more challenging. We saw breadth narrow, I think, partly as a relief rally from the debt ceiling, partly as a relief rally because the cry has been the Fed's only going to raise one more time, which I disagree with. But so I think much of this spreading of breadth has been a relief reaction, and I think that will soon come to a halt.
Julie, it sounds like you guys are in somewhat of a lockstep agreement. I don't know. Where do you think the Fed comes out ultimately, and how does that factor into your thinking?
I think that the Fed is a real question that kind of we all agree is that it's going to be actually harder to get from 4 to 2% than it was to get from 10 to 4%. And the question is the Fed going to be patient and able to sit on its hand, or does it feel like it needs to continue raising in order to keep pushing inflation down? And I think that's the part where there's a little bit of disagreement. What I'm happy to see in the rates market is that there seems to be agreement that we will be higher and we're not cutting right away. I think a lot of us kind of are confused why we have to raise so much, and let's see how this filters through. It's sort of like, when your girlfriend has dating this guy that's kind of like, blah, not your favorite, you just kind of eventually give up and, you don't want to sit next to him or anything, but you just kind of let him be. And I feel like the rates market is a little bit like, suit yourself, Fed, go ahead.